Did the Fed say that U.S. interest rate hikes are coming soon, or recession? Chairman Powell indicated that they could raise rates in March, and he did not rule out the possibility that they could raise rates in every meeting in 2022. Shifting policy to tightening the money supply and raising rates spooked the markets. Inflation hitting 7% in 2021, the most since 1980, seemed to surprise Powell, who claimed that inflation was transitory. Considering the massive expansion in the money supply, his narrative would prove false. Now he claims, "I think there's quite a bit of room to raise interest rates without threatening the labor markets." This too, in my opinion, is a false narrative. The low unemployment numbers are not a true representation of the labor markets, as millions are quitting their jobs per month and not participating in looking for work. As I mentioned in an earlier video, economist David Rosenberg projected significant losses among mainstream assets, even if the central bank is no more aggressive than to move the federal funds rate up just 1.75%. According to Rosenberg, equities and real estate could take hits to the tune of 30% and 20% respectively. Such losses would be in keeping with the kinds of downturns in stocks and real estate that coincide with recessions. So the question is, will Powell stay the course and raise rates to fight inflation? How does raising rates fight inflation? The goal of raising rates is to contract the economy, meaning less people borrow money because of higher rates and consumers stop spending because money becomes valuable to save. But actually, in the beginning, what usually happens is inflation gets aggravated because companies pass on the higher cost of debt onto consumers in their products and services. It's important to understand that the economy does not operate like a light switch that you simply turn on and off. The Fed does not have that much control. In the 70s, when they also thought inflation was transitory, they had to raise rates over 10 years and get above 20% before it had an effect on inflation. You can see in this chart, while the Fed was increasing interest rates, inflation continued to also increase. Now let's take a look at what gold and silver did. You can see that they both spiked, gold going up 1,500% and silver 2,100%. The Fed was eventually successful in fighting inflation. It took getting interest rates up to 22%. The effect of that was the economy contracted, meaning GDP went down, unemployment went up, and in the 80s, we went into 2 deep recessions. And that's what we're worried about now. Fighting inflation will probably get us to another recession. If we compare this to today, it appears that the Fed is almost following the same playbook. I don't believe the Federal Reserve has the stomach to actually raise rates to the point where it will fight inflation and possibly trigger a recession. With supply chain issues, labor shortages, unlimited money printing, the health crisis, bubbles, debt, market volatility, growing political instability in the United States, rising global tensions with Russia and China, and inflation. There's so many factors here that it's clear the situation is likely to turn ugly quickly. That's why my team is educating Americans with our web conference. Nobody knows what's going to happen next. It's up to each of us to get the education we need to learn what we can do to protect our families. Make sure you sign up for our web conference today.